So I've been trading since around 2005. I've always been interested in market history for a long time. My background work has always been fundamental analysis. I'm a chartered accountant. So I've always looked at having to consider fundamental analysis. However, I have sort of done a lot of study of market participants' behavior, and that sort of steered me into technical analysis quite some time ago. So that's basically my background. I've experienced all of those frustrations that you were talking about, the indecisive behaviors, the bad actions, the balking, the jumping in and out that you well defined as those possessed by an unskilled trader. Thought that was pretty good. I totally agree. Yeah. So look, I can understand, I readily admit that has been my pathway. During the past 15 years, my core strategy has been via trading ETFs with a set of rules based on Stan Weinstein's stage analysis. Still discretionary, but it's been reasonably good. But along the way, I've always sort of dabbled in other strategies and bits and pieces, which have always tended to confuse and just added to my mistakes. So in 2018, I took the Share Wealth Systems on board, and I was trading SPA3 Investor on the ASX and the US markets. I purchased Trading in the Zone at that time, read it a couple of times, really liked it, and said, yeah, I've got it. But I didn't do the exercise on page 189. So I've even bought another copy since and given it to one of my kids who's interested in this stuff. So I did engage with it, but I didn't do it properly. I trucked along pretty well 2019 and 2020 using SPA3 Investor was pretty good. I ran into some confusion in 2021 and 2022. My ETF strategy, the signals conflicted with SPA3 Investor signals, and I couldn't reconcile it. I just could not reconcile it because one was a mechanical system and the other was essentially a rules-based discretionary system, but it wasn't mechanical. So I stepped back from SPA3 Investor for about 12 months. So in that period, what I did a personal inventory, Van Tharp, one of his templates, assisted by some wise words of, look, I've got a library here that would probably choke a dog, but I'm a very big fan of Tom Basso, Mr. Serenity. Now I know why he's called Mr. Serenity. So I did that personal inventory and I was as honest as I could be. And what it told me, just in a nutshell, that my gravitation was towards having a discretionary element in my trading. I could not, whichever way I look at it, I could not get away from that. And in terms of trading, I identified, right, it's me saying, well, these are my psychological strengths like perseverance, analytical ability, which has been pointed out in your course, that's not good enough to actually get those final 10 meters. And I know that. And weaknesses were things like procrastination, probably too much analysis, and also seeking perfection. That's my accounting hat, probably, as well as some other anal traits. So it did lead me to acknowledge mid to late last year, look, I do need a mechanical system with unambiguous rules. I haven't got any programming skills. I've got reasonable amount of market knowledge, but no programming skills. I live in New Zealand. No one that I know in New Zealand trades the markets. In my role, as we had a lot of trusteeships in our accounting firm, I saw the horrendous portfolios of trusts where I was trustees, and because I'm not a financial advisor, I couldn't really do anything much about it. So I thought, well, how am I going to do that? How am I going to get a mechanical system? And Share Wealth Systems was still right in my mind. And then I started thinking, well, do I really believe that I want a mechanical system? And if I do, how am I going to change my habits? What's that pathway? That's what I've been grappling with for the last part of last year. I don't know how, I don't know whether I saw it with some of your emails or whatever, but I started reading about, or I became aware of your process and mindset training intensive. At the beginning of this year, it was February sometime, I re-engaged with Share Wealth Systems and I did that. I did that course. I thought that combining Trading in the Zone with Atomic Habits was brilliant. It was perfect for me. Now, that Trading in the Zone, it's got lessons outside of trading. I wasn't familiar with Atomic Habits before, but I was familiar with some of the material, and the way it was integrated in those training sessions, I thought it was really good. Well, the first thing it highlighted to me is that I had not been thinking about the markets as a trader. As an example, I considered that I was thinking in terms of probabilities, and the way I was doing that was in my rules. I was stacking up as many sort of positives and triggers and everything like, well, is it in an uptrend? Is it above the moving averages? Is it in a strong sector? Is the market acting well, etc., etc.? So by the time I'd done that, I thought, well, hell, I must have, my rules are giving that a real high probability of continuing to trend up. But what if it doesn't? When it didn't, that is when I wasn't thinking of a trader. Now I understand that accepting that the outcome of each trade doesn't really matter in the bigger scheme of things, because over a large sample of trades, the system I'm using has got an edge. And the Mark refers to it as the micro and macro levels. I'd read that 3 or 4 times and been through that. There was so many pearls in your sessions. Well, what I did, I got my old notebook, and each session I'd write stuff down, and then I'd come back to it. I'd do the homework exercises, and I just kept poring over it. And as you said in there, it's not just about reading it, it's actually studying it. And that was another key that I got. Like other members that do it you've got to approach this, I think, to get the benefit out of it. I mean, I have been amazed that, yeah, I can honestly say, hey, look, I have got a desire to become one of those effortless, peaceful, consistent traders. And I feel that now I've got the tools. I'm not there, but I've got the tools to be able to get there. Since I started, I started on that 25 trade exercise back in the beginning of March. One thing that resonated with me, and I see you've got it reference in that ebook, is what intentional learning, practicing. I can remember that when I was playing cricket, when I was a high school kid. Tennis ball practice and under there, off drives, keep your elbow up, time and time again. Bloody coach dropping the ball in front of me. Like, I think, yeah, that does work until it becomes intuitive. You know, you get a ball, just on a half volley, you just automatically drive it, or if it's a bit short, you automatically cut it. You don't start analysing what you're doing. And I know you love using the sporting analogies to make the points, but it is true. Putting my nose on the grindstone and going through those sessions. So the trading exercise, I've taken 11 entry signals and 2 exits. I've got 9 positions in my portfolio. And I can honestly say, I think one of the first 1 or 2 was a little gold. And I thought, oh, don't know about that one. What about those other ones? No, I said, no. And the irony is that it's probably the best performer in my 9 that I've got now. But I'm not even looking at that. So I did. I execute those signals quickly, effortlessly, but that trading exercise has certainly changed the way I approach those signals. And also it's changed the way I look at those 5 fundamental truths. I've never been big on affirmations, but instead of doing the analysis, every morning I would sort of look at the Australian Financial Review, look at what was happening there. I look at stock charts and do my sort of analysis of market breadth, what's the internals doing, those sort of things. Well, now I don't do that. What I do, I've got my big 7, I call them. And I mean, my wife thinks I've gone mad, but luckily I've got a separate office with a door that I can shut. But it is, and it's like my 7, good traders are not afraid. It's a numbers game. Ignore the ticker. Expect nothing and never be disappointed. My investment dollars are a means of keeping score. React, don't predict. Keep away from the news, whatever you do, and crave consistency. So that's my daily routine. And man, it's actually helped. But it's because my interest in markets and stuff like that was almost sort of a hindrance more than a help. Your program needs study rather than just reading. It's members have got to, you won't get any benefit out of it if you just approach it and don't do the work. And I know you've said that, and that's what I've found. I couldn't suggest any improvements to it because I found it really good. And there are so many, that's why you've got to study it to find the nuggets. They're there in front of you. But unless you're in there looking to find that stuff and to do it, you're not going to benefit. That's my take on it. That's how it's impacted me. And I've kept written notes from each session, as I said, and that studying the material covered by those two is now part of my process for the last 6 or 7 weeks on the weekend. Instead of trawling through a whole lot of market stats and other stuff, I just revise that, and I just pick out, like today, I picked out, I think it was page 180 to about 189. It was the area on self-discipline in Mark's book. That was my exercise for today. It's fine in theory, but you don't start having those emotional reactions until you've got some capital on the line. And then when you get those inevitable periods where the wave of the market is down or there's a correction or something like that, that's the acid test. It's getting back to one of your terms there, is about, look, you're operating a casino. You're playing the numbers game. And yeah, look, the overall market was in a downtrend. But anything can happen because, and who knows? Look what happened from November last year. It was doom and gloom, and if you're reading the stuff, which I was then, I mean, the world was coming to an end. But there was a catalyst, and boom, it turned around on a dime and just kept going until maybe a month ago. So going through this, I have changed my focus. And look, there's so much stuff in there that's really good, and that's that thing about desire. I mean, there's another word that there's stuff in there, and look, I know that Mark Douglas, it's interesting that he was your mentor for that time. I didn't know that until because I glanced through that ebook yesterday or the day before. It's just a continuation of good stuff. But I'm pretty happy I'm pleased that I did what I did. How much capital do I start with this? Do I throw in 50 grand, 100 grand, 150 grand or whatever? And I ended up with 9 positions and 60 grand, which is a pretty small proportion. But I thought, well, I will start small because I want to practice getting, and I'm going to put more in on a level basis, but I wanted to ease myself into it. I'm pretty happy. And I mean, okay, time will tell. And I mean, the feedback I'll get, well, am I still keeping to my rules and still consistently doing? And has it become second nature and putting on and following the entry and exits just like a reflex? Not just hope, but my plan is A, stay alive, and B, to keep doing what I have been doing, keep trading, putting on, like when those signals come up, I've got a time of the day. I thought, well, I've got these funny things about the beginning of the day, the opening market and the end. So part of my rules, 2 hours after the market opens, boom, that's when I put my buy order in or my sell order. And particularly with one of the things with sell, with exit signals, one of the bad things I was doing was jumping the gun and anticipating, and then you find, the damn thing closed above the stop loss. But I don't do that. So my plan is to keep executing in the way I feel now, which is effortless. And that's why I wanted to start on the lower side, build that up. Because trading a lot more, bigger position sizes than I'm trading now, a lot bigger, hasn't worried me in the past. So I know, but I wanted to get into that habit of doing it, instead of taking the risk of frightening myself off if I started a bad patch. I mean, this is it's a good patch. I mean, the 2 that I've exited have been losses, but I couldn't care less about that because, I know I'm not even looking at where it is. I've got the portfolio in beyond charts, which I never really did. I never got my head around that before, but this time I have. I'm using it. I've got my SAP portfolio in there. That's what I've called it. So I'm just slowly working around that. So my plan is to keep and to become that flawless, effortless trader that you talk about in the literature and that I see in some of the reading that I know. And I've got heaps of stuff. Tom Barso, who's a mechanical trader, and then you get Van Tharp, who sort of looks at maybe the mindset thing. But there's some good stuff in there. But though, apart from Mark Douglas and then all of the other concentrates just on the stuff that is easy to control once you've got your mindset in action. And that's I sort of intuitively knew that, but your course really hit home. That rammed it home to me. Hey, look, yeah, I said, yeah, mindset, yeah, of course that's important in sport and sort of all sorts of things that I've done, I know that it's the top 2 inches that get you over the line. But and I thought that here too, but I was sort of probably living something else. So I just blame that on my chartered accounting background. I think it is important to sort of come away from the sessions with some strategy for yourself. If you have said, yeah, I've got that, I've realised that, but unless you can re-engineer those sort of negative influences and start developing alternative habits that take you away from that, you're going to do what I did first time round. Oh yeah, look, Trading in the Zone, great book. Because I mean, how do we measure our progress in doing some of those things? How do we, you can read it. And I think it was in your ebook, a comment that Mark made to you in 2010 or 2011, why most people didn't do, I think his was a 20 trade exercise. And it was a bit different from what you've got there now. But I can recall reading why he said that people didn't do that. And that's exactly why I didn't do it. I mean, the reading, and look, I have spent most of my working life reading stuff to the nth degree, but it was easily actionable. It was numbers, it was sort of some strategies, it was buying a business, it was setting this up, it was doing something, but it was never about changing me. So yeah, I really think, without sort of pissing in your pocket, that what you've come up with is sort of really adds value to the mechanical system. And I know you've got to have the mechanical system to be able to do it. I'm very pleased with what the impact has been on me. I have surprised myself a little, but that's good. I'm pretty happy. You don't have to go looking to mess your mind up. You're in your natural state is bad enough. Certainly a good opportunity for me to say, look, thank you. And I haven't got there, but I'm pretty confident that I'm seeing a whole set of something that I didn't see before, but I'm determined about getting on board with those principles that I can sort of now see that will get me into a reasonable trading space, if you like. I feel pretty positive about it. And I've got tangible reasons for doing so through that course and just through my subsequent reactions. Okay, it's only been 2.5 months or so, but that to me is positive, and it's not going to happen it's not going to happen just at the flick of a switch. So I know that's one thing that I have come to a conclusion about too, that human nature being what it is, or mine anyway, I'm never going to be able to say, hey, I can do this perfectly and I will continue to do it. So there's always going to be a gap. There's always going to be something to reach for. So I know that for me, the work will never be done, but keep doing it and keep striving will be what makes it work for me.